Hey everyone, welcome back to the channel. Today we're diving deep into Snowflake, ticker SNOW, for a full comprehensive stock analysis covering everything from the latest earnings momentum to valuation, SWOT, and where this AI data play might head next. Snowflake has been on fire lately with massive stock gains and renewed excitement around its role in the AI ecosystem. The company sits at the center of enterprise data management, and its recent quarter showed product revenue hitting $1.3334 billion, up 33% year-over-year, which beat estimates and triggered a sharp rally. Snowflake operates a cloud-based data platform that lets organizations store, analyze, and share data across multiple clouds without the usual infrastructure headaches. Founded back in 2012, and now led by CEO Sridhar Ramaswamy, the company serves thousands of customers globally with its data cloud offering. It's based in Bozeman, Montana, employs about 700-800 people, and has built a sticky ecosystem where data moves seamlessly between partners and applications. Breaking down the revenue, the product segment dominates at roughly $4.47 billion for the latest fiscal year, while professional services add another $212 million. Geographically, the United States accounts for the bulk at $3.65 billion, followed by EMEA at $764 million and Asia-Pacific at $271 million. That U.S. concentration gives stability, but the international push could unlock the next leg of growth as enterprises everywhere adopt AI workloads. On the earnings front, Snowflake posted strong top-line results with product revenue growth of 33% and raised full-year guidance, showing the business is accelerating again after a couple of softer years. Gross margins remain healthy, around 67%, though the company is still investing heavily in R&D and go-to-market, resulting in continued net losses of about $1.33 billion for the year. EPS came in better than feared, and the market rewarded the beat with a nearly 35% pre-market pop. From the earnings call, management highlighted how AI demand is driving new workloads onto the platform, with particular strength in agentic AI use cases and data sharing across organizations. They emphasized continued product innovation, customer expansion, and the flywheel effect, where more data leads to more AI applications, which in turn pulls in even more data. Guidance was lifted on product revenue, signaling confidence that the AI catalyst is real and accelerating. Looking at the balance sheet and cash flows, Snowflake holds over $2.8 billion in cash, with a current ratio just above 1.0, giving it solid liquidity to fund growth. Operating cash flow turned in over $1.2 billion last year, and free cash flow reached $1.1 billion, a big improvement that shows the business is starting to scale efficiently. Total assets sit near $9.1 billion against $7.1 billion in liabilities, and the company carries moderate debt relative to equity. On valuation, Snowflake trades at a forward multiple that still prices in aggressive growth, with the stock around 280 after the recent surge. Price to sales sits near 17.6 times trailing revenue, which is rich, but reflects the market's belief in sustained double-digit expansion and eventual profitability. Analysts have been lifting targets, with some seeing another 10% upside as AI monetization ramps. Strengths include robust product revenue growth, a differentiated data cloud platform, and clear AI tailwinds that are expanding the addressable market. Weaknesses remain the ongoing net losses and heavy spending on sales and R&D. Opportunities lie in agentic AI, data sharing, and international expansion, while threats come from intense competition in the data cloud space and potential macro slowdowns that could slow enterprise IT budgets. Recent performance has been explosive, with the stock up over 60% in the past week and nearly 99% over the last month, far outpacing the broader software industry. One-year returns sit around 33%, while the 5-year number is closer to 16%, showing the latest rally has reset momentum after a long period of digestion. For intrinsic value, a discounted cash flow model using conservative assumptions around 10% discount rate and 3% terminal growth points to a much lower fair value than where the market is currently pricing the shares. The model delivers an intrinsic value near $33 to $34 per share, well below the current trading level around $280. That gap highlights how much future growth and margin expansion investors are embedding in the price, so any slowdown in AI adoption could lead to sharp volatility. MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our Stock's Intrinsic Value Calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.